Hello guys, and I am back on my daily analysis for the DXY, and today again we are looking at the dollar index chart. So we'll go through today what's the next round liquidity, where we can see and find our point of interest for today's trade and to anything else. So again we will start with the most higher time frame we have to look, that is monthly. Just as a look. Okay, nothing changes in the monthly time frame. Well, how many days are left for the monthly? 10 days are still there for the monthly candle. Okay. Now the weekly. Let's see weekly. Weekly has 3 days left. Um, I mean, include today, it's almost 4. Okay, so we are seeing a rally. Look, we are having a fair value gap here. This low to that high. Not a fair value. I mean, you can say that, yeah, it's a fair value gap, or you can say that it's a BC, which one side delivered in the upside market, downside delivered in the warm market. So above this candle's high, when the market reaches power, we can have a scenario as an inversion fair value gap, like this one. Okay. Now, oops. I think it's been slided. It wasn't with the. Okay, let me remove. That's not needed. Okay, guys. So this is inversion fair value gap, and this is a fair value gap, which when we will go on to the lower time frame, then you will see it. And this levels are the intraday levels, and this is the order block. So I'm anticipating a market run as today is Tuesday, so this might be making a high of the day. So we can reach in this fair value gap, or we can see the ones that deliver in the market. So that, I mean, just look at this price action. It's more salient in the there. So what I'm anticipating in the market today, that is might reach there and act as a resistance there, then we can have a pull down onto the downside objective, taking up the sell liquidity and ultimately reaching in the fair value gap which we are looking for. That is this one. Okay, now coming onto the lower time frame. Not in the lower time frame, that's in the daily. The majority of the time you should be spending on the high time frame. That's because the higher time frame is more salient, it's more clear, and it's usually trend following. So in my sense, it's gonna be cool. Listen, one thing I want to tell you, it's not necessary for the market to um, take out the market maker initial market maker consolidation. I mean the initial original consolidation, which is supposed to be happen here. Then a rally, accumulation, smart money, reversal, first leg, second leg, and now we are having a almost looks like third leg. So today I'm anticipating that this down candle, which they have used previously for buying, now they will mitigate their orders in here just for selling. So I don't think, as this is also a really very balanced area, so I don't think price is gonna come there. I know, although I have a perspective, let me show you that again in the weekly time frame what I'm looking for. I know this is a perspective as an inversion favorable gap, but if you go onto the lower time frame, like the daily chart which I have shown you, that look at this one, this down candle was previously used for the buying purpose, so I don't think it's gonna come there. If it does so, it's just nothing wrong. But I'm just thinking of a matter that whenever I mean look at this down candle when this gets traded through like here, which candle, yeah, this candle gets through, then look at this one candle, this candle's come up and act as in resistance in there and then came down. So I'm just anticipating in that sense that this candle straight been through, so this candle might be respected. I don't think this is going to come up there and take out the high of this candles, but if it does so, there's nothing wrong in between them. and a little bit of this volume balance will be salient. I do think this is going to be the next round liquidity, and we'll look for the time of the day to enter the market. We don't just anticipate the high or the low. I mean, we can anticipate the high or the low or the manipulation of the market, but it's looks like another high probability setup for me. That's why I changed my scenario, and I only think to trade in the New York Hill zone. Earlier, I used to trade the opening range. I usually try to capture the whole range. If it's bullish, then I try to capture the low of the day, something like that. And I'm not saying that that's not good, but it doesn't. I was in hurry to rush through that process, and I was just not getting consistent results. So I changed my mind, and now looking at the New York setup, so that I'm just trying so that I could find my edge. What is it? So anyway, um, this is what I was expecting, and down subjectives are there. Also, I don't want to see um, redelivered rebalance area to get straight through. I don't see that. Okay, now coming on to the lower time frame. Finally, for now, ignore the left side of the process. We don't need to see that because we have already discussed about that. What's gonna do? Um, so consecutive up candles are order block, even the low. Well, I don't think this whole gap will go away filled. I don't think so. What's the time is there? Okay. Now let's switch quickly to the 1 hour time frame. Okay, what we are seeing here is um okay, this is midnight. We traded above the midnight candle. I mean the midnight price, and now rejecting, taking the buy side liquidity in here. Now we're expanding. If we take out this low, it's gonna be a breaking market structure, and if that breaking market structure does, and we do get a setup somewhere here in the kill zone, like the silver bullet time or the New York kill zone, then I'll try to enter the market. So more so, what I'm favoring is the downside. Look, we take out the buy side liquidity, now rejecting in a quick manner. Although I know it's a good setup and it might be a good setup, but I just don't want to participate in the market because um, I'm just making myself as a disciplined student so that I will only trade my setup and my time. Whatever setup I will get, it's I will not take. I'll just watch the price action if it does so or not. If it does so, then really I'm good. I mean, I was right in the price action. That was it did so. But you need to be just remain silent and have to develop some kind of discipline here. All the down candles are being violated, so it shows a willingness to go onto the lower side. This is the 50% range from this low to that high. So if this candle gets also violated, then this low to that high, making higher higher. This might be the what we say the high of the I mean the breaker formation can be there. But we don't need to capture the whole daily range. You just need to capture one setup, one move. That's gonna make your day. Now let's switch to the euro. Okay, euro USD. Weekly fair value gap there. We are inside of the what we say is the inversion fair value gap in the weekly time frame. You can see that. Right. Now we do have a fair value gap here. And in the lower time frame, there's a fair value gap also. Rejected, it usually moves in a same manner as the DXY does, just in the opposite sense. Daily, yesterday Monday we rallied downside. I was looking for a buy, but just consolidated in there. Later I looked, there was a USD holiday, so banks were just not participating in the MAC. Now you can see a rally from here inside the inversion fair value gap. So remember, fair value gaps, fair value gaps go straight through that later come down and act as support and resistance for the oppositions. Now, for nothing clear in the 4 hour, it just looks like consolidation. So let the market come out of the range. I mean, this beefy body candle is, we are just inside this beefy body candle. So let's wait for the market to come out anyway in the down or the up. Then look what to do in the market. Anyway, for the intraday perspective, let me switch our weekly range. Okay, so this was the weekly open. We traded down in the early in the week. Remember, if we want to expand higher, we need to trade. We don't need to, but usually what we see in the price action is the Monday early in the week we trade down. Just think of it like a weekly range. Weekly range usually gives us open manipulation then expand. Looks like that. I mean, if you look at the weekly one, this is the open, okay, and just think that this was a manipulation. And what's gonna be the high above this one, or might be above, at least above this one, and that is what we are anticipating. Okay, midnight open, we traded down, came on the lower side. That is the order block rally. Look, let me show you a very special thing in here. Now look closely what I'm going to show you. This one, this one makes higher low. I mean lower high. I mean, I'm just cleaning up this. So this has not taken out the low in here, and this has taken out the high. It is showing us an S&P divergence. Also, this low was not violated, and this low is being violated. This does shows an SMT divergence that it's doing something. We are seeing changes in the market. Now let's have a quick see. to the GPUSD. Okay, what we can see in the GPUSD, GPUSD has taken out this low and this low. So there's also an assembly divergence we can see. But as I told you that should just stick with your time frame, your objective, what you're looking at, what time of the market, and just participate in that. Okay, now coming again in the dollar. So clearly there's a it doesn't want to go lower. It shows a willingness to go higher. And up candle, down candle, the balance price range was redelivered by this candle. So basically, we are expanding. We'll look for some point of interest in our time to enter in the price. Let's have a look. Higher time frame. Okay, so it's really expanding. Mm, we have not taken out the low here. Or is clearly taking out all the high. So it's making an S&P divergence. And now we can anticipate a rally from here to whatever objective we are looking at. GBP USD still consolidating. Let's look at Euro GBP once. What it's going on here. Yeah, so I forgot to say to show you this one. Yesterday, GBP USD, I mean Euro GBP reached the weekly bullish order block high. You wanna see this? Yeah, see this down candle reached there and now it's expanding. So Euro is expanding in here. So take a moment and think what's going on here. Euro GBP is expanding. It means Euro is expanding. So what it's gonna do with the GBP USD? It's either gonna consolidate or go lower. The more objective, I mean, it cannot go lower. I mean, it can go lower, but usually what happens when euro is expanding, euro GBP is expanding, it means the euro is stronger than GBP, so it's not going to consolidate. And if euro GBP, I mean, if euro is consolidating, then GBP USD will go down. The scenario is euro GBP is expanding. If euro USD is consolidating, then GBP USD will go down. So that's why we are seeing a rally here. And look at the GBP USD targets premium end of the fair value gap. We have formed a down candle. For our this one, the 1 hour. Let me remove this one. We have came down and take out this low. Sell side liquidity taking. More so, it looks like Euro USD is stronger. I'm just gonna keep my patience and not to participate in the market. And this was the setup, and this was the market we looked at today. And again, tomorrow I will come back with the same objective. And one thing at the end, I would like to tell you this might be the low of the week because today is Tuesday. Look at this consecutive down candles. We have got right through that one. When it comes down, it can act as an order block. If we are having imbalance, we can um, okay, one imbalance is there. As this is not a breaker, market can come down here. So you can take entry from here, put down your stop loss in here, just for the study purpose, like this. And this is nothing, just 5-7 pips. They will get rid by this one, so just have a stop loss here. You can try to capture the whole range like this, and you will target this one. Still, it's 1:8. I'm just showing you what can be the next scenario, but I don't think price is gonna come down because we have found a down candle here. So it's gonna be hard for the price to do that. Anyway, see you tomorrow. The same Dxy DXY, and see you there. Bye.